Hello all. In this video, we are going to discuss the format of preparation of cash flow statement along with the format of preparation of cash from operations. So, you all know what a cash flow statement is. A cash flow statement is, which we already have discussed, will state the inflows and outflows of cash into an organization. That is the incoming cash and outgoing cash that is happening over a period of time. So, in order to understand the inflow and outflow of cash, you need to prepare a particular statement which is known as cash flow statement. So, while discussing the fund flow statement, we know for preparation of fund flow statement, there was 3 steps involved. First step was to find the changes in working capital, and second step was to find out the fund from operation, and thirdly you will prepare the fund flow statement. Likewise, in preparation of cash flow statement also, there are 2 main steps. First one is to calculate the changes statement of cash from operation, and secondly it is the statement of cash flow statement. Okay, so we are going to discuss it one by one. So as I told you, there are 2 steps: cash from operation, which is otherwise known as cash flow on account of operation. So it may be cash inflow, that is, if it's a positive figure, it will be cash inflow on account of operation. If you are getting a negative figure, it will be cash outflow of operations. Okay, so second one is cash flow statement. So as we know, there is one particular format in which you will find cash from operations. So as in case of fund flow statement or fund from operation, this is very easy. That is, first thing you have to know what fund from operation is. The first step of preparation of cash from operation is that you should find what fund from operation is, which we had already discussed in the previous videos and classes. So if not, sometimes in cash flow statement question, you will have a direct answer for fund from operation. It will be given directly in the question. In that case, you can just take that fund from operation and post it in the amount column. If it is not given and if it's a comprehensive problem which you have to do, then you have to find fund from operation according to the steps which we had already discussed. Okay, and to that fund from operation, you will add increase in current asset. Okay, so whenever you find there is increase in current liabilities, okay, when there is an increase in current liability from the previous year to the current year, that amount or that particular transaction will be added to the fund from operation. And likewise, decrease in current asset will also be added back to fund from operation. So first step is you have to identify what is fund from operation, and to that you will add increase in current liabilities and decrease in current asset. Okay, then you will get an amount as a total figure, and from that amount you have to minus or less increase in current asset and decrease in current liability, which is the right opposite of what you stated here. Okay, so fund from operation, you have to increase in current asset. So if there is an increase in current asset from the previous year to the current year, that will be minus, and decrease in current liability will also be subtracted from the calculated figure here. So then when you subtract that from the above given amount, you will get a total figure. That total figure, if it is a positive figure, it will be cash inflow from operation, or if it's a negative figure, it will be cash outflow from operation. So I think I left that cash inflow from operation or cash outflow on account of operation. So this is a simple format of preparation of changes or cash from operation. Changes statement of cash from operation or simply format of cash from operation. So this is a very important internal source which is used to calculate cash flow statement. Okay, so this is a simple format. So that was our first step. What is the second step? Our second step is cash flow statement. Okay, so we will see how to calculate cash flow statement. So there is a simple format for cash flow statement as well. First thing what you have to do is you will have a balance sheet in which liabilities and assets will be stated accordingly. From that, take out the opening balance of cash and bank. So based on this opening cash balance and opening bank balance, we will do or prepare the sources and application, and from which we are going to prepare a cash flow statement. So first thing what you have to do is you have to identify what is the opening balance of cash given in your balance sheet. Say for example, if the opening cash balance given in the question is 30,000 and a bank balance given in your question is 50,000, and apart from that, for the current year you will also have the closing cash balance and bank balance. So firstly you are going to take the opening cash and bank balance and you will post it in the amount column. To that amount, okay, to that amount you have to add so many sources of cash and you have to less so many application of cash in order to find the closing cash and bank balance, so that you can match it with the sources and application. So the opening and the closing cash and bank balance will be matched with the sources and application of cash. That is how we are going to prepare a cash flow statement. Don't get confused. First thing, you have to identify the opening cash and bank balance. You're posting it in the amount column. To that, we will add some sources of cash. Sources of cash is some transactions or from some items you will earn money to your organization. So from which all activities you're going to get money into the organization, that activity is known as the sources of cash. So let us see what are the main sources of cash for an organization. So the first internal source of cash to an organization is cash from operation, which you had find in the first step. So by finding the cash from operation, that will become a internal source of cash to an organization. So that is the main source of cash in your enterprise. So we are writing that. So to this balance, you're adding cash from operation. And next the thing given is issue of share. So whenever there is an issue of share in an organization, it will give you money or it will help you to raise money. So that is a source of cash. So that will also be added to the opening cash and bank balance. Issue of debentures. Whenever you're going to issue debentures, it will also give you some source of money. So that is also another item or activity which will give or which will be added back to this opening cash and bank balance. And sale of any asset, it may be fixed asset or any investment or something. So if you are selling any asset or investment, it will give you money, and that money earned is a great internal source of cash. So that will also be added back. And loan from long-term loans. Okay, this is long-term loans, which will act as a source of cash. So these items will be acting as the source of cash in cash flow statement. So you will have a total of source or cash available by calculating or adding all these items. That there will be a total amount. To that total amount, you have to subtract certain application of fund. What do you mean by application of fund? The uses of money which you had earned. So in what all way you are going to use those money. So first thing is, In case if you are getting a negative balance while preparing cash from operation, that negative balance is cash outflow on account of operation, which we had already discussed. So in case you're getting a negative value, it will come under application. But if you get a positive value, it will come under sources of cash. So if you have a negative value, that will be treated as an application of fund and it will be stated here. Okay, and then redemption of preference share or debentures is also a use of your money which is earned. So when you're redeeming your preference share and debentures, you're giving the money or you're applying the money to those activities. So it will also come under application of fund. Next, when you're prepaying the loans or when you're paying a tax or when you're paying the dividend, all these things is use of money. So it will come under application of fund. So when you add all these items together, you will get a total of application, isn't it? So what you have to do is you add the sources of fund or source of cash to this total amount. You add that, and from that amount you are subtracting the application of cash. So you will get a closing balance. The closing balance should match with the closing balance of what is given in the balance sheet. So this closing balance of cash and bank will be already given in the balance sheet. So when you do this transaction or this adjustments of sources and application of fund, it should match properly with the balance sheet. That is how you simply prepare a cash flow statement. So this is one method of preparation of cash flow statement. Apart from this method, you can also include the three activities like financing, operating and investing activity. You can show them separately in your cash flow statement and you can also prepare it. So this is one of the simplest way of preparing cash flow statement. And from this format, you're going to do one another sum in which we are going to simply prepare cash from operation. So this is a problem in which you're going to prepare cash from operation. So this is how you get the question. Okay. So from the following information, calculate cash from operation. Fund from operations of the year 1998 is 84,000. So as I told you, sometime in the question they will directly give the fund from operation and current asset and current liability as on 1/1/1998 and 31/12/1998 are as follows. So let us see how the particulars are given. So the first particular given is trade creditors. Okay, so trade creditors on 1/1/98 is 18,200 and 31/12/1998 is 19,400. Trade debtors is 27,500, 31,500. Bill receivable is 40,000, 35,000. Bills payable is 27,000 and 31,000. Inventories is 1,81,000. 85,000 and 1,70,000. And trade investment is 40,000, 70,000. Outstanding expenses is 20,000 and 25,000. Prepaid expenses is 5,000 and 8,000. From this, you have to identify which item is a current asset and current liabilities. Okay, so you can match it like trade creditor is a. We're going to give green for liabilities and other color will be given for asset. Okay, so bills payable. So bills trade debtors is an asset. Bills receivable is an asset. So bills payable is a current liability. Inventory is an asset. Trade investment. Trade investment can be treated whether it can be long term or short term, it should be calculated, and it can be investment is also an asset, so you can take it as a short term investment. Okay, outstanding expenses will be treated as current liabilities. and prepaid expenses is current asset. So you have to find out whether there is increase in current liabilities and decrease in current liability that will be added to the fund from operation. When there is decrease in current liability and increase in current asset, it will be subtracted. So let us do it this way. First thing is you're going to do statement of cash from operations, okay, and then you are going to give particulars, that's the format, particulars, amount. So we know what all items should be added and what all should be included and all. So as we know, we are going to take fund from operations as the base. So you're going to take fund from operations. What is the amount of fund from operation? It is 84,000, isn't it? To this amount, we are going to add some items and subtract some items. So first thing is you're going to add increase in current, or I'll just write CL, current liability, or decrease in current asset. So find out what all current liability has increased. So trade creditors 18,200, 19,400. Yes, it has increased. So you have to find, first thing is you can write it as trade creditors. Okay, so you have to find what is the increased amount. So 19,400 minus 18,200. What is the amount you're going to get? That amount is posted in the amount column, that figure. Okay, and next one is bills payable. So that is also, listen, bills payable 27,000, 31,000. So that is also increase in current liability. So you are writing it as bills payable. How will you calculate it? Like 31,500 minus, sorry, it was 31,000, no? 31,000 minus 27,000. So what is the amount you're getting? 4,000. So that amount is posted in this column. Next one is outstanding expenses 2025. Of course, that is also an increase. So outstanding expenses, it is, it is 25,000 minus 20,000. So that is 5,000. Okay. Now all your current liabilities are over. So find out whether there is a decrease in current asset. So debtors is a current asset, 27,500, 31,500. So it cannot be added. Bill receivable is a asset. So 40,000, 35,000. Yes, there is a decrease in current asset. So you can take this bills receivable there and write bills receivable. What is the amount? 40,000 minus 35,000. This is all for your convenience. You write 5,000 there. Okay. Next one. Next current asset is inventory. So 1,85,000 and 1,70,000. And next one is trade investment 40,70. So that's an increase. And prepaid expenses is also an increase. So you can take this inventory here and post it here as inventories. Inventories, that is you can write 1,85,000 minus 1,70,000. So you will get 15,000 there. Yes. So these items will come under increase in current liability and decrease in current asset. You can check other items. Other items, it will not match with this items. Okay, this heading. So add all these items and write the total here. So when you add 15, 20, 25, 20, 25, 29 and 32, 200. So 30,200 is the total of all these items. We will do the adjustments later. So next is you have to subtract certain items. Yes, what are those items? It is increase or you can write decrease in current liability, which is the increase in current liability, decrease in current liability, or increase in current asset. So you can see what all items will come under decrease in current liability and decrease in current assets. So in the question, I think you have already taken all the current assets. So you can see trade debtors is also taken, bills receivables. Bills receivable, this is taken. Just we can take it as it is taken. Inventories is taken, and only these things are available. So these three things only will come under that heading. So trade debtor 27,500, 31,500 means increase in current asset. And then trade investment 40,000, 70,000 increase. Prepaid expenses 5,000, 8,000 increase. So we'll write those things in this heading and just write trade debtors. So trade debtors, there is an increase. How much is the increase? 27,500 minus 31,500. You can do the opposite. You will get an amount. What is the amount? It will be 4,000, isn't it? And next one, it will be trade investment. So for trade investment, it was 40,000 and 70,000. So write 70,000 minus 40,000. How much is the amount? It is 30,000. Next one is, it is not trade, it is prepaid. Yeah. Prepaid expenses. Okay. Prepaid expenses was 5,000 and then 8,000, isn't it? So 8,000 minus 5,000. What is the amount? 3,000. So this is the items. Is there any other items in the question? No, there is no other item. So we have taken all the items together. And now you're going to calculate the total of 30,000, 33, 37. So just write 37,000 in the amount column. Now what you have to do, from fund from operation, add this amount, and from that you are subtracting this amount, where you will get cash from operation. So if it's a positive figure, it's cash inflow. If it's a negative figure, it's cash outflow. So just write cash from operation. Let's hope it is a positive figure. Okay. So 84,000, okay, plus 30,200. What will be the answer? You will get an answer of how much? You will get an answer of 14,200. Sorry, it should be 1 lakh. Yes. And then from that amount, you are going to subtract the 37,000 which you have got from the second sum. So when you subtract it, what will be the amount you're getting? Just 84,000. I'll just confirm. 84,000 plus 30,200 is 1,14,200. From that, when you subtract 37,000, you will get the amount as a positive figure. It is 77,200. Okay, so this 77,200 is a positive figure. So you can just leave it as cash from operation, or you can just write cash inflow from operation. So this is how you calculate cash inflow or outflow from operations from the given transactions or given items in a balance sheet. Okay, so for today we will discuss only this format, and in the next video we will discuss how to prepare a cash flow statement. I hope you are clear with this sum. Thank you for listening.